He said he can't make it.
I don't know.
Oh, he's probably gonna make it.
He's probably just waking up.
Hello, everybody. Welcome back to another episode of Finance Junkies. We are here today with the Couch Investor, otherwise known as Neil, who is on YouTube. He's on Twitter or X. He does a ton of finance content. He's going to be talking to us about a bunch of the kind of core picks in his portfolio. I think I've known you for about a year now. We've talked here and there. Same thing with these guys knowing you. So it's fun to get you on the pod and finally get to chop it up with you. First question is, why the Couch Investor? Why is that the brand?
That was going to be my first question.
Totally.
Because the paper bag investor was taken. Duh.
Oh, the paper bag investor.
Yeah, it's the first question I always get asked, and maybe that's why I picked the name. No, because the channel started at the start of the pandemic. Was on the couch. Everybody was a couch potato. I loved investing already for a couple of years. I was like, couch investor, couch potato, might be a good mix. So here we are, couch investor with a potato as a logo, and that's the full story. Oh, it's good. It's a good icebreaker as well. So there you have it.
Are you going to change the name or are you going to keep it?
No, I keep it.
Okay.
Well, when you start making real money, you're going to be like the sofa investor, the armchair investor,
Luxury investor.
Yeah, the
luxury armchair investor.
You know what I mean?
The Gucci
recliner,
couch investor.
The Gucci investor.
Ooh, I like that. Now we're going somewhere.
Yeah, everybody, hit the like button for the couch investor. Everybody, hit the like.
So we were going to talk about a couple of stocks because apparently everybody's sick of Enphase. That's what I heard from
We'll
the
talk
group
about
chat.
it at the end.
We'll talk about it at the end. Apparently they're tired of stocks that are going down that are very valuable. But forget about that. I know you're a big believer in Amazon and a couple of other things that we are SOFI too. So maybe we can start, there. And Mercado Libre, if I'm saying that correctly too.
Mercado Libre.
What is your biggest investment?
The biggest one is Tesla. It's now 35% of the portfolio. Before everybody starts screaming, 34, 35%, crazy. It's because I started a big position in 2019. So obviously the stock grew extremely fast and that position expanded as well.
So how much are you up the 20x on Tesla since 2019?
I am up, yeah.
Wow.
Yeah,
Okay.
I think 2019 it was still at the 40 billion market cap. I think somewhere around there.
Look at the chart. There's nobody that bought probably before December or January 2020. I think if you bought before January 2020, everybody's up.
Yeah, it's only the people who didn't believe and followed the FOMO in. But that's Tesla. We're going to talk about the yen because nobody loves Tesla on this channel, apparently, Amit. So
I love Tesla. I don't know what you're talking about. I love
no, but just to keep it
something different. But what's your second biggest?
For sure. The second is Amazon.
Okay, so let's start there. Why?
So also because it's a position I had since 2018. At the end of 2018, we also had that trade with China crash because of some decisions there. So the stock crashed. I was like, Amazon back then. I mean, I started as a European. I was like, oh yeah, Amazon, pretty cool company. Everybody uses it. Why not start a position in there? Then over time, it just grew and grew and grew. I still think Amazon is one of the best companies on the planet, despite being over $1 trillion or so. Right now, we are seeing the operating leverage that it has. We've seen operating income go up. The last couple of quarters, free cash flow was down the drain. But for a company like Amazon, flipping the switch, what is their decision? They could have continued to invest. Of course, they invested a lot during the pandemic. Everybody was thinking, this is a new phase of the world, so we have to invest a lot in logistics, etc., etc. It was a mistake. Okay, everybody did mistakes during that period. Fine, but right now you're seeing free cash flow suddenly. They switched it. It's now 7.2 billion or so in the last 12 months. So pretty amazing. They have AWS. Yes, it has slowed down, but it's still the biggest one, especially in dollar terms. It's still growing more than the other two. You have advertising, which is huge. Amazon's advertising is huge. Prime subscription, very important part of the business. In my opinion, the best subscription out there, bar none. I think they can raise prices and still you'll find value. And then there's still Amazon, the online store. I mean, you want to buy something, Amazon.com, search, and that's it. It's the whole ecosystem. It's the whole ecosystem.
I have a question to follow it up because you said you started buying Amazon in 2018. You started buying Tesla in 2019. So what made you find those companies and invest in those companies when YouTube finance was not even a thing? Like, how did you do that without having, something like Finance Junkies or even a couch investor like yourself? What made you find those companies when the YouTube finance space didn't exist?
So I started investing 2016. Back then, very traditional investing, not really high risk, purely dividends. My first stock I bought was Coca-Cola, so you get the picture a bit.
I think you did well then. If you held it, you did well.
But I didn't. There are many positions I had. I had AMD at 22, sold at 64. Great, but I could have let my winners run. There was no reasons to sell. Same with NVIDIA. Okay, we learned. But to answer the question, I went from pure value, pure dividend save to the switch of I'm still young, so let's look at growth. As a European, there are some great companies in Europe, for example, ASML, even Adyen, even if it's down a lot recently and a lot of people are talking about it. Most of the best companies on this planet are in the United States. So, I mean, quick search on some finance websites on Google, you look at the new companies, you go on Yahoo Finance, you look at the quarterly reports, and you get familiar with those companies. So that's how I found those.
I'm curious, when you mentioned Amazon, because we don't talk, we're in the States. Do you have, I don't know, where are you from? Are you allowed to tell us?
Belgium.
Belgium, okay. Do you guys have Amazon Prime and all of that? It's all there.
Yes.
Okay, so you bought it based on the service too that you use. It wasn't just like looking at the numbers of Amazon, the business.
It's not as good as United States. It's getting there, but yeah, of course we have it.
No, I'm curious. What do you mean not as good? It's not as big. It's not as used.
Yeah, you don't have all the same options. I don't think I've seen same day delivery for me. Okay. Of course, there's no Whole Foods and stuff like that. So it's purely Amazon.com, and then it can come, I think, next day there is sometimes, but usually even that, it's not always certain.
Yeah, I mean, I'm a big believer of like just buy monopolies. So I got more interested in Amazon as they scaled their business because like I saw that they were delivering, maybe these guys can attest to it, but they deliver same day. Like I would order something in the morning and then I have it by 3 o'clock. And I don't know many other businesses. I don't think Walmart could even do that in the same day. And they're an older, more established business. So if you just look around the landscape of what Amazon is doing, it just seems obvious that they're winning, even if they're spending more in terms of the retail business that everybody's so shitting on because everybody says that's their shitty business. And I'm like, no, that seems like they're building this massive moat and then surrounding it with AWS, surrounding it with the advertising model that they're doing on top of it. So it seems like that gets you in the door, the cheap price for toilet paper or whatever, or the convenience of it. It's not even cheap, by the way. You guys ever went to Home Depot and compare prices of toilet paper? I did.
You brought up.
Who goes to Home Depot to buy toilet paper?
You're shopping with
like a
Costco.
You can buy it.
I've never.
You can buy it in massive bulk. Well, because they have
massive bulk.
They have a whole section there. People on job sites. If you go to job sites and you have a bunch of porta potties, you're gonna need to just get.
You're gonna need a lot of toilet paper,
man. No, but VITALY brought up a good point about the same day. I think the speed of their delivery is what really took them over the top. Because if you think about it, when Netflix had that DVD model, the shipping almost put them out of business. It wasn't until they figured out a deal to get these things shipped to you very quickly that they could really scale the business. And Amazon, just turning it on same day, if I could save, like I could go to the store right now and buy something same day, but just the convenience of having it delivered same day is just, you go, hey, why wouldn't I pay for that? And there's not much of a premium that you're paying. I think that combined with the Prime subscription where you say whatever, $100 a year, free shipping, that's it. It's game over. Unless someone can offer that now becomes the minimum.
Well, yeah, it's become so much so. Like I do walk around Costco or Home Depot, and I'm like, all right, why would I carry this giant roll of toilet paper home? Yeah. Because like I'm just gonna go home and order it and let it show up in front of my house. So it makes it like a no-brainer, especially if you're a part of Amazon Prime. But the other thing about Amazon Prime that I know people, once again, they shit on Amazon for being a stupid retail store, but they raised it from $99 to $130. I think that's what it costs now. I'm not sure if anybody even knows.
Prime membership?
$130, yeah.
Yes.
But the thing is, if they raised it to $150 tomorrow, I'm not going anywhere.
Everyone's paying it, yeah.
So, I mean, this is the operation leverage that they have. And I'm sorry to steal your thunder, but I am pretty bullish on Amazon. Like, as it was tanking, I was like, Me and Chris were saying buy Amazon. Guys, buy Amazon. It's ridiculous. Google too, of course, but like
Yeah,
if you
no,
guys want into
I
it.
agree. At
Neil,
$90.
I was gonna say, what do you think the AI plays for Amazon? Do you have any AI thesis around that company?
Well, they themselves said that they've been using AI for everything for years. So, I mean, for now, in the future, it's AWS growth, AWS applications, whatever. It's going to be pretty big. And then, like you said, I know a lot of people did trash Amazon.com, the e-commerce side of things, but without that, there is no Amazon. It's an extremely crucial part of the whole thesis. Whatever they'll do with AI there, better recommendations, your AI shop buddy, whatever.
Well, actually,
knows?
no. So the value is not actually using AI in shopping, like targeted shopping. It's actually more in figuring out how to better price advertising. The model that Amazon is going for now has completely flipped in that instead of trying to compete with their own, own Amazon sellers, what they're doing is every time that you want to be an Amazon seller as a third party, they're charging these third party service charges that are ridiculously high, but these guys have so much margin they're willing to actually pay for it, right? So right now you have an Amazon warehouse, so you use Amazon logistics, Amazon gets a cut. You want to have your product show up at the top of the feed, that's going to cost you something to put it at the top of the feed, right? So as an example, if let's say you're selling a pen, there's value in having, when the person types in pen, it being at the top versus being at the bottom. So advertisers right now, they're saying, hey, I can pay a little bit more to make sure that my product shows at the top of the feed. So Amazon is doing a great job in monetizing that. And that's why if you look at their advertising revenue, their e-commerce ad revenue is growing like crazy. And if you know anything about e-commerce advertising, super high margin. It's like SaaS-like level margins. And with the amount of people that are in the ecosystem right now, it's just literally they're picking up pennies all over the place, and it's generating them a shit ton of operating income. And because they've already built out their capital, they've already spent the capex for the last 3 years in 1 year, they don't have to spend as much in capex moving forward, which means a lot of that income is going to be coming in. So what are they going to do with it? In my opinion, they're going to do a lot of share buybacks. And if they do more share buybacks, that means that shareholders, we get bigger piece of Amazon by just being holders. So I think the scenario, you're right about AWS growth, but for my bullish scenario for Amazon, it's more along the lines of them figuring out how to monetize their services to become a lot more operating efficient. Andy Jassy is known to be that kind of person for AWS, and I think he's doing that very similar model for all the other parts of Amazon's businesses. And so Amazon will, in my opinion, end up doing very well over the next 5-6 years.
Your internet connection's pretty bad, Chris. You look like a Skype call from like 2006 right now.
You know, it's weird.
Man.
I thought
We're all having internet. Vitaly's
no,
lagging.
I thought Chris's
Vitaly's
internet
lagging.
was bad too, but then I go on my phone and he looks fine. I don't know if it's us on StreamYard. We're seeing it look like a potato.
So it's streaming.
No, but even on YouTube, I can see it on YouTube. Like
on my YouTube,
you're
it looks
low
fine.
quality, and Vitaly, your voice comes first before the picture.
I feel like this is StreamYard, bro. StreamYard gotta get their shit together.
StreamYard's
We're
getting-
leaving. We're leaving to Streamlabs. Okay, Neil, let's transition to the Amazon of Latin America, Mercado Libre.
You just summed it up.
Okay, so give me the thesis on that. Why is it the Amazon of Latin America?
Because it basically follows a bit of the same playbook. It has the whole ecosystem. So you have Mercado Libre, the marketplace. You have Mercado Envios, logistics, Credito, which is a bit small. I don't really look at that besides the risk of credit, bad loan, bad debt, etc., etc. You have Mercado Pago, payments, financials. It's getting extremely big. Smaller parts of the business that will become bigger and bigger over time. The advertising, like Chris said, the margins there are very, very big. And you have Mercado Shops, which is a bit of an equivalent to a Shopify. They help you create a website, and then you integrate the whole ecosystem. Their biggest moat is because it's a Latin American company. Latin American people prefer to buy from Latin American companies instead
Really?
of...
Is it that simple? Is it that simple? That's why they've been able to take the market over Amazon? Because
No, they've been doing this for a long time. They're locals. The management there is top class. There is some great interviews on YouTube you can find from management team. I mean, their vision from a long time ago was pretty clear. And as you can see from the years, I mean, they've been spot on despite geopolitical issues, tensions, foreign exchange struggles, etc. They've been doing pretty well.
My only, can you just share the screen real quick? Because when I did an episode of the stock tank, one of the guys pitched it. I think Tevis pitched Mercado Libre. I'll say it English way, Mercado Libre. My only issue
you got to be
with
a gringo here.
Yeah, I'm going to say
Mercado Libre.
The gringo style. I'll say it the gringo style. My issues with the stock, I hear what you're saying, and they went through he went through all of the bullet points, the growth, the getting into payments, the P2P, crypto, everything. It all makes sense. My issues with the company are, number one, the stock price at $1,250 a share. Unless you're buying fractional shares, it gets very hard to feel like you're having any skin in the game.
Well, what's the market cap, first of all?
The market cap is 62 billion.
62.
So it's a decent, it's not like a mega cap, but there's still room to grow there. But at 62 billion, at $1,250 for a share price, that is something that I think is a bit of a turnoff for investors. I think if they did a 10-to-1 stock split and those stocks were trading at 124, the stock would shoot up, and it'd be easier to play options on this. That's first of all. Second of all, if you just look at the run up that it's had, like basically since IPO, and if you look at where it's come from. There was a massive swell up, and just if you look at charts, you've had a double top. Now you've had this double top, and we've basically capitulated back down to its pre-run. But when you look at the run up that we've had here, hold on, let me go to this here. We've run up. What is it? I don't know why my mouse is getting fucked up today. There we go. So we've run up. What is that?
This year it's up 47%.
All right, but I'm saying from that low, we're looking at something like 120%. Mm-hmm. It's run up 120%. And I don't know that I'm not saying it might not eventually get back up to retest these all-time highs, but after a double top and basically a capitulation back down at that stock price, considering that all of the stuff that you're talking about is kind of already baked in, not saying it won't get there, but I don't know that it's going to be this growth beast like we would expect from, say, an American company. Although they do have like a massive stronghold in Latin America, and the stats that they have in terms of like the cost of customer acquisition for their P2P is so ridiculously low. Like we were comparing it to SOFI. I think it cost them like $3 to get a new customer, and it costs like SOFI like 30 or something, or whatever it is. And so it takes them a long time to recoup that cost. And the word of mouth is huge. So I'm very bullish on the company, but I don't know if we've missed the main part of the run, is my point. So do you still think like today, if you don't have a position, that it's a good company to say start DCAing into at these levels?
Obviously, I'm biased, but yes. And the point you made about the stock price being high was a point I made last year as well, when the stock price was much higher.
Yeah,
I thought they would maybe announce a stock split because it would make sense for retail. I talked to someone who was someone in the investor relations. He said no way.
They're still not. Why? Yeah, what's the reasoning behind that? Why do they want a stock price of $3,000?
They want to focus on other things right now.
Because they're Argentinians, dude. It's easy. Argentinians love seeing their shit inflate. You know, they're used to the inflation.
That's the quote of the podcast. But do you get my point?
That was a good one. That was a good one.
Look at if Argentinians are so used to seeing the price of milk double every other month, you know, if they see the price go down, they think, oh, there's something wrong with this milk. I should sell it.
Low key, it might.
Sorry, dude, but there's something called portfolio value, and that is a better number to see grow than the particular price of particular stock. One share, you know what I'm saying? I just don't understand if you want to see the company grow, just even for the sake of being able to have the options market open up at $100 or sub $100 stock price. I mean, look what happened with Amazon, right? They did a 20-to-1. They were $3,000 or whatever it was, and now it's somewhere in the $100 range, and it just makes so much more sense.
You're thinking like an American, Carlos. You need to stop thinking like American. Think like
you're telling me you're CEO of that business. You would keep it at $3,000 versus dropping it down and saying,
hell yeah, makes everyone like, oh my God, look at this Mercado Libre, man. This is an expensive stock. This must be doing exceptionally well. Bro, Mercado Libre to 50,000. That's where we're going.
Right. Okay.
Keep all the speculators out.
Is Amazon
speculative. You only buying
competing-
fractional shares. You'd be like,
Is
I
Am-
own 75% of a share. You know what I mean? It's like,
one share. Is Amazon competing with them on a level playing ground over there, or no?
By level playing ground, you mean?
Are they already there and winning? And then
Of course they're there. Yeah, they're there. Alibaba, C Limited, Shopee is there as well. What's this? The Pinduoduo one. Some low-level e-commerce Wish type of
It's in China.
app. Yeah.
So my question is, why you already have a big Amazon position? So it seems like this is a similar thing, just a lower market cap. So do you think there's more upside to this? That's why.
Yes, I think Latin American market, especially, they're huge in Brazil. Brazil is a huge economy, the biggest one there. And despite all the geopolitical stuff, they're going to grow more and more. I mean, the financial stuff there, the things that we're seeing in Europe and in the United States, I don't know much more about the United States, but I've been following some companies there as well. Brazil has been there a long time ago, like the P2P payments, fast payment, one-day payments from banks. I mean, they've been doing this for a long time. I've got an uncle that lives in Brazil, so I get a bit more information as well on the ground. So yeah, there is more upside. Look, again, the stock price is expensive. I have here the mean for the last 10 years, PE ratios, EV/EBITDA, price to sales, price to free cash flow. Today is much lower than the last 10 years, despite the huge run-up.
Check out the chart that I just put up there, Amit. Just scroll into it. The healthiest thing to look at when it comes to a lot of these companies, look at this operating income growth. Like, can you beat that?
Why is this the healthiest thing?
Double? Because with operating income, you get so much flexibility on what you can do with it. You can expand, you can buy back shares, you can do mergers, acquisitions, do CapEx if you need to grow the business. I mean, look at the growth rate these guys have on a TTM basis, almost 25% year over year. This is the kind of business you want to be in, and they got no sign of it slowing down. Look at the revenue right here. Even though they've got slowing revenue, like not by much, but slowing revenue, they're able to generate higher gross profit and higher operating income. I think this is honestly a
their net
no-brainer,
income
bro.
has tripled since last year, I believe, as well.
Yeah. Look at this. Like it's crazy. Their net income is going gangbusters. Cash from operations on a TTM base, 4.5 billion. And they're what? A $50 billion market cap right now?
Now, but here's the thing. I have a question
Yeah.
here because Amazon would not be $1 trillion if it didn't have the cloud stuff. Like if it was a retail business, it would not be worth $1 trillion. Neil, does Mercado Libre have anything that could have SaaS margins? Because if it's all retail, isn't this kind of absurdly expensive? Because it's just a retail company at the end of the day. If we're looking for future growth, right? Because we're not going to have SaaS margins.
It has payments, it has advertising, logistics, and as we've spoken at the start with Amazon, right? The same-day delivery, one-day delivery, they're doing that as well. I mean, for others to compete with them, it's close to impossible right now. And again, it's years in the works. They've not reached this point like this. It's not the COVID period that brought him to this place. Yeah. As KRIS said, look at the growth rates after COVID. Still pretty impressive.
And Latin American GDP continuously outperforms a lot of parts of the world. So overall, the income levels as they grow, so does like the people's appetite for higher quality services that I'm sure Mercado Libre is providing compared to a more sclerotic, like local environment. The other thing also from a regulatory standpoint, Latin America, it's not just one continent, right? It's literally every country has its own set of challenges. And so you need someone uniquely qualified to navigate all that stuff. And Mercado Libre, because it's already got a toehold in the markets, is able to create almost like a moat around it. So, a lot of people forget that South America is very hyper local in the way that you do business. So the way that you do business in Argentina is not how you do business in Brazil or how you do business in Honduras or some parts. So those are the kinds of things that Mercado Libre seems to have figured out. They've got a logistics network that's working well. And so, I think over time, Mercado Libre because of its focused and hyper local nature, will do exceptionally well for the Latin American market. The only challenge with Mercado Libre way further into the future is that they're almost pigeonholed into Latin America rather than being able to expand out, but then that's the same equation that you run into like Africa.
There's a lot of people. There's a lot of
right.
people.
Yeah.
And they've run the numbers, even for the P2P, the payment system, they run the numbers. They have pretty small penetration. They do have a large base of customers, but they still have a relatively small penetration, just even in the P2P in terms of the overall population, right? And they are going after the younger and younger generations, which is what you want, because I'm sure eventually they'll be able to offer some other like more banking type services, which could be the next leg up for them. And so once you're in that family, Spanish families we're a bit, we could be a bit thick-headed too. Once you find something you like, why am I going to change?
Are they expanding anywhere else? I'm just curious.
No,
they're expanding to any country. They're expanding to any country that can say the name correctly. If you say Mercado Libre, they're not selling to you. There's a 10% markup.
That's a lot of countries, though.
Mercado Libre.
So take a look at from their last earnings presentation. I'm sorry if it's a little. Hold on.
Yeah.
So, man, I don't know how to get this thing to go to the right, but basically, this is their numbers here in. God damn it.
The number 4. Look at that, guys.
Right here. No. Whatever. So right here in Brazil. Damn it, man! It's being covered up. Okay. Revenues. This is their percentage of revenues and like what part of their business is coming from what. So in Brazil, their e-commerce revenue is about 39%. Their revenue is 39% is coming from commerce, and then fintech is only 4.6%. I know right now Brazil is having like a fintech revolution because of my thesis with Nubank, and what's his name? Tanner could probably go into length with that. Argentina, they have a lot bigger fintech presence with less e-commerce. Mexico, which they have really good commerce presence and fintech. By the way, I think one of the things that from an investing standpoint we all should look at is Mexico. I think Mexico is a very big untapped market considering how much of production is probably going to be moving in the near term from China to Mexico. Last time I was in Mexico, man, construction everywhere. I think a lot of times people here in the US, we think of Mexico and all we think is narcos. Like, oh, it's just people fucking doing like selling coke everywhere, and it's not the case. Like,
no,
maybe there are.
No. That's Colombia.
That's Colombia. No, I mean, depends. Like, I think in the 80s, Colombia was definitely the place to be with like what's his name, Pablo Escobar. But like, whenever you think of Mexico, you're always thinking of like Sicario. Like, oh, everyone is involved in human trafficking and drug dealing. Like that's just the thing, and the cartels. And the funny thing is, Mexico is going through its revolution of the same way that we had the American mafia here in the US, where at one point the mafia actually owned a lot of stuff and the mafia ended up going legit. Like we're going to Vegas, right? The Vegas was actually built by the mafia. Like
really?
Yeah.
Oh yeah,
it was all financed by the mafia.
Have you never seen any movie?
That's why it's so good.
And bring up growth stock.
Casino, baby.
Was his comment?
Casino.
I think I saw Ocean 11 on a plane.
Ocean's 11. That's his mobster movie.
Yeah, the mafia basically built and controlled Vegas. Look up all the stuff. The Rat Pack. What's his name? Frank Sinatra.
I thought the mafia was New York. I didn't know that was Vegas.
Yeah, but they expand it out. They don't just stay there.
New York, Chicago, Vegas.
Yeah.
What's interesting
Miami,
is the cartels.
Boston.
The cartels are doing the same thing. Like if you stayed at any resort in Cancun, most of them are owned by the cartels. Like there's a reason why no one ever gets harassed at the resorts. Like if you fuck around with the tourists over there, it's probably because the cartel is making sure that it's providing protection, dude. The organization MS-13.
I went to Cabo, right? I went to Cabo and we got up in the morning and we went on the beach and we were just walking on the beach, and there's a line when you look back from the ocean, you can see the line where the resort's property ends. And as you're walking on the beach, like nobody bothers you, but there's like these guys that are like sitting on the rocks, like right after you pass the area. And if you walk past that, it's almost like you said, they have total carte blanche to rob you or two, because you could see that they were looking at you, and it was like, if you cross that line, now you're in. Now it's fair game. It was very strange. And they would ask you, "Hey, let me ask you a question." I mean, like, no, I don't speak English, bro.
All right, let me move on to one last stock before we go to Enphase and Tesla. PayPal. Are you bullish on that, Couch Investor?
And SoFi, I think. Right.
So PayPal, it's the fintech startup that everybody's talking about. I don't own it, but again, at the prices it is today, risk reward, you have to go with the reward here. I mean, it's an old company, fine, but it's definitely not dying. I mean, I've posted it on X. Only Visa is more popular in most countries in the world, like 67 countries, something like that. PayPal number 2 at 63. So how can you argue with this point that PayPal is dead, and people saying, oh, but X will introduce payments and that will put PayPal out of business? I'm like, okay, fine.
I think there's a good comment on Twitter, which somebody posted, X is going to kill PayPal. I'm like, oh, this is awesome. Can you send me a link to this? I got to sign up for this.
Yeah, that was perfect. I had to respond. I was like, bro, that was the comeback of the
There's no response by that guy.
Yeah.
So
okay,
PayPal,
so what about SoFi after PayPal?
So I'm biased here because I own SoFi. So with SoFi, there is more reward than risk. There is still risk. It's much smaller as well. They're still growing, still losing money. Of course, that might change pretty soon. But with the way Anthony Noto is leading this company, wouldn't surprise me if it becomes a huge bank in the future. I don't think it's going to be a traditional bank, but going to be much bigger than today, that's for sure.
But
we need to reach more profitability.
As part of your portfolio, what are you betting on these on SoFi?
By betting, you mean
a percentage or something? Yeah.
So PayPal I don't have. SoFi is, I think 5%.
Oh wow,
something like that.
Okay, that's a decent bet
amount
for a portfolio. Yeah, that's not so bad.
Yeah. But if you look at the majority is Tesla 35, Amazon 12, then Meli and Meta is another 14. So all the rest is pretty small compared to those guys.
Yeah, that makes sense.
When did you start buying SoFi? Was it during Chamath's pump and dump or before?
No, so I didn't. I covered it during Chamath's pump and dump, but I started buying after it changed the name. So I don't know what it was, IPOE or
IPOE,
yeah. So yeah, my average right now is, let me check, probably 9.6 or 10 maybe today. I don't know. So not the lowest of the lowest, but certainly not high in my opinion.
Not at the 30s, yeah. Okay, cool. So I think that was all leading up to the rock star of the night. Before let's do Enphase, and then we'll
go to Tesla. Well, I actually contacted you because you posted something about Enphase that you're like, oh, I'm doing some due diligence on it now. It's because it's tanked. So I'm curious. This was 2 weeks ago, I think. What have you discovered in your 2 weeks of due diligence?
So yeah, Enphase. It's an interesting company. It had a great couple of years. But now, even with the crash, I talked about this with Vince as well yesterday, actually. There's still a lot of risk in the short term, not for the future of the company that's going to be doomed or something like that. I think solar penetration is still very, very early days. But hearing what the company has to say, management, I mean, near-term headwinds, it's a given right now. So why chase? Because you're going down. You could have bought it, I think, in May. Yes, you went up until July or something like that. You were up 25%. Most people would be probably happy. Then you had the earnings report, bad guidance, bad report, or weak, should I say. You're down another 30% or so. So good products, good roadmap, in my opinion. Just high interest rate environments right now. Like they said, it's going to impact the business in the short term. I'd rather wait to see positive momentum return for the company than start chasing it just because the price is low. But me personally, I'm not going to open a position because I still believe that Tesla Energy is my energy play. I'm not going to say that they're taking the whole market. I'm just saying that my energy play is going to be with Tesla.
Yeah, if you have Tesla, you don't need Enphase. That's what you're trying to say.
What do you
Yes.
think of the let's say a counter argument to that, where if say, because it's affecting everybody, it's affecting the high interest rate environment will affect any company that does solar. So it's going to affect, say, SolarEdge and Enphase equally, the two biggest players. What do you say to the fact that if they're citing that as really their only headwind, then what you're getting is an artificially low stock price right now to be able to DCA in this environment, and the day that the Fed either announces further pauses or some dropping of rates, then a lot of that pent up tension, those people that want to buy solar will feel more comfortable doing so. And basically the floodgates open. It's sort of like what we're talking about in the housing market, right? People are just holding on, waiting for rates to come down. And we know that they have to come down at a certain point. So if it's another year, it just gives you, say, a year to DCA in your position. If you wait until the rates change, until they announce the rates, unless you've got a boatload of cash ready to go right away, you're probably not going to be able to get as big of a position. What would you say to that if you believe that the fundamentals of the company are strong?
Yeah, no, it's the same argument that Vince made yesterday. I agree, but again, I don't mind waiting. And even if the stock jumps on that announcement of the rates coming down, you still have to see the financials of the company become much better.
Yeah.
Because management saying that it is interest rates and it actually be only interest rates are two things. It can be interest rates, it can be something else as well. Remains to be seen. I mean, we've seen this with the auto industry as well, right? Financing your cars is not optimal right now, but we'll see. I mean, we are in the financial space, so we follow the rate cuts, etc., etc. I highly doubt that the normal person follows everything like we do. So even if
they
there
follow
are rate
you
cuts,
on Twitter, and if they watch Finance Junkies daily, they know.
If they, I hope so.
So to connect it to Tesla, Tesla has a similar situation selling expensive cars, at least for now. Maybe in a couple of years they won't. Rates are obviously affecting them as well. They've been cutting, into their gross margins, etc. So are you still DCAing into that, or no? You've even stopped DCAing into Tesla because it's not worth it right now because of this rate thing that's going on?
So with Tesla, for me to be adding more, it has to drop a lot more than other companies. I did add, I think, a week or two ago when it dropped a bit closer to 200, not a lot, but it has to drop more than the others. And with Tesla, again, they cut prices, but still have industry-leading margins, although maybe this in Q3 we're going to see it a bit lower, remains to be seen. But on average, their cars are cheaper than the average price.
On their website, $29,750 for a brand new Model 3 with incentives and the gas savings, which are real. And that's the cheapest car. That's cheaper than other companies' entry-level sedans at this point. So I do have one point to make, because you were talking about how Tesla is your energy play over Enphase. One thing that does worry me as an Enphase investor, as the longer that the rates stay low and the longer that Enphase cannot continue to capture market share right now in this environment.
Stay high or stay low?
I'm sorry, stay high. As long as the rates stay high and people aren't installing solar and Enphase is not capturing that market share right now, it does concern me that as Tesla ramps, my big concern or a big concern long term for Enphase is that Tesla turns on the spigot and actually really starts to push solar. And I think that there's a lot of levers that they can pull, because it's not the primary focus of their business to incentivize people to get solar, whether it's just lowering the prices and selling them at margin and finding a way of making money on the service part, whether it's energy arbitrage, making more money on batteries, or like KRIS had said, they mentioned that maybe they do a bundle deal where if you buy a Model 3 and solar, we'll give you one deal and you pay one price per month. There's a lot of ways that they can get people to buy solar, and that would concern me. So the longer the rates stay high and Enphase does not go capture that market share, the greater that there's a risk of that happening. And if Tesla does do that, although they might not take the majority of the business, and still most installers will probably install Enphase number 1 and maybe SolarEdge number 2. It does concern me that growth that we're expecting long term might not happen. I just think they're a sleeping giant that's not really.
I think you would be right once again if the penetration wasn't so low. If we were at like 90% penetration, I think these companies would have to worry about Tesla coming in and eating their lunch. But I don't think Tesla can supply, and we can see they can't supply. They can't even supply the cars with the batteries. So they just can't supply the demand that's going to be out there and growing. So like we think in such small numbers, like remember me and you did an episode, there's 80 million plus single family homes alone. Forget about dual family, multifamily.
Yeah.
And we have 100
actually.
And we over 100 million, whatever.
100
My
million,
point is
yeah.
like, and only a few million of them technically have solar. Like there is so much penetration left that I think these three major, basically monopolies, in my opinion, Tesla, SolarEdge, and Enphase, are going to grow massively into this market. And then at some point when they reach 50, 60, 70% penetration, then there's a worry. But by then I think we'll be done. We'll probably be retired, I would suspect.
I would hope so. I mean, that's what's yet to be seen. I think we all know that 10 years from now, this conversation is going to be very different.
Oh yeah,
the exact path that it's going to take to get there, I don't think anyone's sure about.
That's when our mom is going to say, "Hey, should I buy Enphase?" And we're like, "Okay, time to get the fuck out of Enphase."
Yeah.
The contrarian pick on solar is actually Google, because they announced today they are selling Google Maps data to solar companies to be able to optimize how those companies can sell solar panels.
Most of those companies have a solar calculator on their website where you put your address in, and it sort of takes.
Look, I'm just saying, Google said they want this to be $100 million per year business. So if you're interested in solar,
no. So what you just said was not that Google is coming for their business, but Google is going to help them do their business more efficiently.
Yeah, and by the way, all the installers. So I don't know if you've been following my tweets, Neil, but I've been talking to a lot of installers, and I'm actually getting a new upgrade to my system. I already have solar, so. Yes, they all use Google to actually, at least initially, check your maps out. And they have some sort of program, which I want to get into what they're using. And maybe it's powered by Google Maps. I don't know. But they do use Google initially to check out your house, Google Earth and all that. So I don't know if they have to pay for that or as they get more into it, they get real-time maps. That's different. Like as it changes, then that might be a paid for service. But right now, I think they're using the free version for a lot of them.
Okay, so Neil, is Tesla overvalued?
If we look at VinFast today, no.
What is going on with that stock, bro?
VinFast.
How much is it up today?
Yeah, about another 30 or 20, 30%. It's
where is this company located again, Neil?
Vietnam.
I thought they couldn't sell. I thought their car reviews were a total junk. Why are they going up?
Well, ask yourself why. Ask yourself how Nikola at some point had a $70 billion valuation. You know,
over $100 billion, I think.
I think what happens is people want to feel like they're getting the next Tesla, but they don't realize that Tesla can and will ship cars to Vietnam. So people are just trying to find the next Tesla, and
but Rivian
they're realizing that Tesla is the next Tesla.
Rivian, when the IPO was the same thing. They also went up.
Was it
like crazy? Yeah.
So
Neil, let me ask
one
you.
of Tata Motors. Remember that one?
No, I was going to say one of the things that I'm seriously considering right now is I haven't done a lot of DD on it, but I'm going to do more. Is around Rivian. I'm seeing a shit ton of Rivians all over the place, and Rivian, based on its cash flow and its big daddy Amazon being a large, like what's the word? Large. Basically, I forgot the term. I'm blanking right now. Maybe I need to follow Amit so I can get more word of the days from him. But basically, Amazon being a partner helps Rivian significantly and basically holds their business up while they're going through their operational changes. So usually what happens with businesses is that when they first start up, the cost of each individual unit is so high that they make a loss per individual unit. But as they scale, unit economics kicks in and the price of the car ends up going relatively the same or coming down, but the profit margins go up. So you have one factory that's building like crazy that now you're going to see improving margins, and Rivian being valued at where it is right now make actually some sense in being an investor right now, considering that they are.
Can you share this, Amit? Can you share this?
Yeah.
I think they're still a 20 billion market cap, right?
On the web for considering that they are the number. Check it out.
Shut up, Siri.
I mean, but still, Rivian. This is right. As of February 2023, Rivian is selling a vehicle for $81,000, but spending $220,000. They're losing $139,000 per truck. Wow. They're losing more than the cost of another truck per truck.
Well, that's what happens.
It's less than
but that's what happens. But Carlos, based on the data that you just saw, right? That's like the cost of building the factory. That's like the cost of hiring the workers. That's like the cost of getting site planning done for another factory. Like all of these things over time, they eventually will recover. This is the same argument that was made against Tesla in its early years. These guys will never make money.
Yeah, but
Look
Tesla
at
never
the
spent
cost that they
100,000
have.
more per car.
Tesla never spent
Yeah, but
that
that
much.
was 2000. That was 2011. That was
I'm
a
just
way
saying they
different
never
scenario.
did that.
Yeah.
It just never happened that way. They didn't do that. They were very
I don't
cautious
know.
with money.
I don't know. I would say we need to, well, yeah, you're right. Elon was definitely a lot more careful. He did take over the Toomey factory in California.
Where's that?
So he got like a really cheap deal for it. So yeah, I mean, in terms of pricing efficiency, Tesla definitely had a leg up because they had a person who was very like cost conscious. The thing is though, with someone like with Rivian, they have a tremendous partner in Amazon being able to float their losses until the profitability comes in. So yeah, I think that right now they definitely are spending a lot of money, but they're also growing really fast as well. You know?
Well, they sold 24,000 vehicles. The real metric is to see how much less money they're losing now quarter over quarter, because that'll give you an idea of when they could actually become profitable. That I can't seem to find that statistic. But I mean, I know that they tripled EV production and deliveries in Q2 2023. So it's a matter of what is the rate, how fast is that rate of loss declining for them. But the other thing is the Amazon thing is it's good. I actually would want to see that. I actually think that a good play for Rivian would just to become the commercial vehicle maker, right? To make it, to have their trucks be essentially the commercial vehicle truck that all companies use, whether it be for like mobile service or for last mile delivery. I think that would make a lot more sense, and they would probably become more profitable because they're selling them commercially and they're selling fleets versus trying to sell these individual vehicles to customers. I'm not saying that it wouldn't be a part of their business, but it's like the Jeep Wrangler. I love that vehicle, but it's not a big part of their bottom line. It's just a niche product that has a very loyal fan base and they can guarantee those sales per year. But it's not going to be a massive change to the bottom line. I'm just not sure. We'll see. I mean, Rivian, they have basically that one vehicle or two vehicles. If they ever expand into,
they have three. They have the van too, but that's for Amazon.
Right, it's for Amazon. So okay, they've got 3 vehicles, which is not bad. I mean, Tesla only has 4 vehicles right now, unless you count Cybertruck, which is 5. So so we'll see. And the other thing to take into account too, Chris, is they're selling a bunch of vehicles right now, but aside from the F-150, there's really no other player. We've really got to see what happens 2 or 3 quarters after Cybertrucks are out on the road. If people are actually choosing that vehicle over it, we have to see the comparisons to those, see how the market responds. So.
I mean, I don't know, Carlos.
I don't know.
I mean, in terms of Cybertruck, that's a very specific vehicle for a very specific audience.
Uh-huh.
I don't know if you want a Rivian, you're not waiting for a Cybertruck, you know?
But if you want a Rivian, you can buy an F-150 right now. They're more traditional looking trucks, you're sure, but we just don't know what the actual
Rivian is. It is sexier. Let's put it.
It's a beautiful. Listen, it's a beautiful truck. I've seen them in person. They are absolutely beautiful, but you just have to see what the customers are going to decide. We can think whatever we want to think. We have to see what customers decide, because although like it's a beautiful truck, but man, when you start looking at all the options, like just recently, Ford released that all matte black F-150 at a ridiculous price. It's basically a wrap. They're just wrapping them in the factory with this nice
for $100K.
For $100,000. Well, that's what the Cybertruck basically is a blank slate. So when you start looking at the ways that third-party people will be able to customize that truck with different types of wraps and accessories, they could very well turn it into the type of like pretty truck that you're talking about Rivian being. So we just have to see what happens. We're so close to seeing.
So Carlos, this is their revenues right now. They're growing about 34% year over year, which is really good if you think about it.
So what's the operating loss? What's that chart?
Well, that's the thing. It's pretty high still to this day because they're spending so much on capex. Mm-hmm. That's one of the major problems right now with their revenue. Let's say right now with $3 billion in revenue TTM, their selling and general costs right now are 1.5, which is pretty much stabilized. So you can see here, they're not really spending too much money on administrative costs. Research and development, they're spending about a 1.6 billion, but that's trending downward as well.
Can you make it a little bit bigger? Make it a little bigger.
Yeah. Sorry.
Could you zoom in a little bit? It's a little better. Okay.
Yeah. Let me just move it over. So you can see here from an operating income point, they're growing in the right direction compared to last year. So let's just take a breakdown. Okay. In the last year, because of TTM, that's what you're supposed to look at. 12 months trailing. gross profit, they generate a negative $2.3 billion in gross profit. They're early company. This is something that happens. This is what I'm actually really kind of upbeat on. Their operating expenses, they're trending down. Like selling and administration costs are down, but the revenue is up. R&D is down, but revenue is up. Depreciation, of course, is going to grow over time as they have more things like a factory and stuff that they can depreciate. So operating income is technically improving. I mean, not improving significantly, but it's improving. Let's just take it on a quarterly basis and see what it is. Their revenue growth last year in September was 47%. So they have uneven growth years where usually every
But
6
that's
months
cyclical.
they have a
That's
spike.
cyclical. Like
Yeah,
Q1
yeah.
is typically terrible for auto sales, so that's going to be normal.
Supply chain issues.
Supply chain. It's just
But
seasonal business, sort of.
But from an operating expenses point, they're reducing down OpEx pretty significantly, which means that their operating income is probably growing in that same regard. I mean,
how much debt do they have? How much debt do they have in cash on the books? I'm just curious.
I don't think they have any debt. They just have whatever, five or 6 billion. I read somewhere, maybe it was last quarter,
debt.
they had seven quarters of money in the bank, I think it was.
Right now, they have in cash, they have 9.2 billion in cash, or cash equivalents. They probably have a shit ton of money in treasuries right now based on, short-term investments. We've got $1 billion short-term investment. These are like treasuries probably. Receivables is not too much. Inventory, $2 billion in inventory. Plant property. So this is a lot of where their CapEx is going. So the plant property is growing. Long-term assets is down. So total assets is about 17.2 billion. Liabilities, they have no short-term debt. Long-term debt, they have 2.7 billion in long-term debt.
That's pretty.
That's probably from
Neil. Would you consider buying Rivian at all, or do you just buy more Tesla?
So I'll answer and I'll add a bit more info. No, I don't want to buy Rivian, even though I do think it's going to be extremely successful. They picked their niche, let's call it, with trucks extremely. It's very smart.
Yeah.
Very attractive vehicles. The tech is there as well, which is going to be extremely important. You're buying basically EVs now for the tech, not for the wheels, in my opinion. So here are the numbers from. I'll read it out. Last year, per unit losses were as high as 157,000. First quarter of this year, 67,000, and then the last quarter, 32,500. So major improvements. Major improvements. And with the vans, it was previously just exclusive to Amazon, but I think Amazon also realizes that it makes more sense to open it up so they can basically sell it to others as well. Since Amazon is a big investor in Rivian, they want to see that company succeed as well. So the van success story, I think, will be pretty big as well as they open that up.
Displace the sprinters, those Mercedes sprinters that you see everywhere, even overseas in Europe, you see a lot of those. That's basically like the last mile delivery vehicle. They'll sell a fuck ton of them, and since you're selling fleet, it's usually more than one set.
Yeah, so but the fleeting will happen maybe in the future, because right now doesn't make much sense because they don't produce that many trucks today to deliver to individual people. So offering fleets won't make much sense right now.
But let's end it on a fun one. When do you think FSD actually is coming? Because Carlos thinks it's tomorrow. Vitaly thinks it's 2 years from now.
Just to be clear, I don't think it's tomorrow. But what you saw, that demo that Elon did, is I cannot understate enough how important of a shift that is. It's a neural net trained just with video. Like, they're not programming.
It's a big deal.
I just want to point out, it's the Kathy Wood thing. Every 5 years it's going to be here.
So Neil, are you on the side of Carlos where you think it's sooner than later, or Vitaly where you think it's later than sooner?
I mean, with all the promises that have been made by Elon over the years, I'll be a show me before I make some conclusions. But that live stream was pretty remarkable when he said that. I know it was around the roundabout, something like that. Mm-hmm. It was not written by code. It was basically nothing but net, neural net training, train it by video. Maybe they're reaching the point where they might have solved it. I'm not saying they solved it right now, because I don't know, remains to be seen. But it's going to take a while until this gets released into the wild in the United States, in Europe. There's some regulatory issues that probably going to arise. NHTSA, whatever, some headlines, or FSD kill the cat, or I don't know, so some stuff like that. So
I mean, all they really, the point that they've reached now is that all they really need to do to train the software is just give it videos of people driving perfectly. That's it. Just continue to feed it videos of it driving perfectly, and it will know what to do, within reason in most situations. And so FSD should improve dramatically from this point forward, because they've been building the tech to get to this point. Also, I think today, I don't even know if we have the news about it, that new 10,000 GPU NVIDIA GPU cluster goes online, and their previous one was 5,000. So the training should get a lot faster. And I want to make a distinction between FSD becoming a thing and a robotaxi network becoming a thing. I think that they'll solve FSD, but it's still going to take them a while to be able to build out, say, a robotaxi network. But I still believe that by, what is it, we're 2023, I still believe that by some point next year, maybe towards the end of next year, we will see Tesla start rolling out the first pilot programs of these. And now they won't be all over the country. It'll probably be in a major hub like Vegas, maybe going from hotel to hotel, because they do have, or San Francisco. But the reason why I think Vegas is because the Boring Company is already there, right? And they have those cars already doing trips for people, and they're expanding that. So I think legislatively with them, that might be a place to start. Or maybe it's simultaneously San Francisco, Vegas, maybe somewhere other place in California like LA, and just to prove the model, right? And really just keep it small so that they can work out the kinks before rolling it out to different cities. That's what I think. So there's a difference between FSD and robotaxi. Yeah.
So you mean basically leaving FSD beta to just FSD release?
Yeah.
Okay. I could agree with that. There's also going to be a gap of 6 months between hardware 3 and hardware 4.
That's what he said. Yeah.
Right. So yeah.
The other problem that has to be solved is like, I don't know, is hardware 4 now needed for the current FSD? Because
no,
it's not needed. That they're optimizing it for hardware 3 now, because that's what most of the cars have. And then I guess they're going to do, like, it's like when you upscale it, right? They'll upscale it to the new software, because I think some of the hardware 3 still has.
But hardware 3 is only the last couple of years. So every car before that is screwed. They're hosed. Everyone who bought FSD 3 years ago, it's hosed.
I don't know how that'll work. I'm not exactly sure how that's going to work, because at the end of the day, if they have the video cameras, I don't know. That's interesting. I mean, he was talking some stuff about like frame rate.
Transfer. You can transfer.
Well, he has buy a new car, buy a new car, and we'll transfer you for free, whatever.
I think if they do that, they're gonna experience a massive litigation if they do that, because there's people that bought it with previous hardware expecting it to one day be turned on.
It's kind of messed up. Yeah.
But if their vehicle can't physically do it, then it's a problem. I think that'll be a major problem, like litigation-wise. And
if you bought it a long time ago, you probably didn't pay $15,000 for FSD.
5,000, right?
Yeah, so it's already a $10,000 discount. Which I don't know. Maybe if you want to buy a new car right now with the credits, with this and that, it's not going to cost you that much. Well, but it's an issue, that you were promised something, it wasn't delivered.
That'd be a question for Rango. He's in the chat actually. How would that work, Rango? If hardware, if the only hardware that can run it is hardware 3 and above, how does that work with older Teslas that have grandfathered in prices on FSD? Will they have to upsell them a new vehicle, or will they find a way of making it work on older hardware? It's an interesting question.
Okay.
All right. Cool. Thank you for coming on.
Thank you.
Just a side question before we go. Just a side question. How many total positions do you have in your portfolio?
So I have the main portfolio, which I think is 15, 16 positions, with lots of smaller ones, 2 to 3% or so. And then I have now a small dividend paying portfolio, which I'm trying to build up for my older self.
How old are you, Neil? Like 28?
29. Yeah.
Okay. Still young.
Still young. I found one gray hair today, so yeah.
But what do you do full time?
If you pull that one out, 2 of them are going to come back. So
I heard that story as well.
Don't do it.
So full time contributor for the full Seeking Alpha, even though I don't really contribute that much there. YouTube, and then I have some side stuff consulting in Belgium.
So that's really cool. You get to do content full time, and you get to make a living from it. That's awesome.
Yeah, it's something I never thought I would be doing ever. So yeah, I guess lockdowns were positive for me.
The cream rises.
Yeah, But
All right,
yeah.
his link is there in the chat. Make sure you follow him, Couch Investor, also Couch Investor on X.
Yes,
Thank you, Neil,
so
for
I can
joining
reach
us.
that 5 million impressions.
Yes, we gotta get
Finally.
monetized on X.
It's hard.
Then I can take KRIS to Disneyland.
Were you the one that had an argument? Well, not argument with me, but the back and forth on Disney, like in
I think
DD?
we had 1 or 2 comments, not back and forth,
Yeah.
but
Okay. Yeah, no, someone was questioning, like asking me about the DD on Disney. So I was like, okay, let me just put out some numbers, because I think there's a bigger bull case than people really know about than people give Disney credit for. And by the way, Amit, you really shouldn't talk about Disney, considering you have your entire thing this morning on Disney's ESPN deal with possibly.
Oh, that was a fire
complete-
take. That was a
That was
fire take.
complete
I came up with it
garbage,
on the
dude.
spot, and I was like,
Complete
"This is gonna work."
Complete garbage.
No,
People.
It was a dumb
Yeah.
take, but I thought I made sense of it.
Here,
All right.
real quick, just share this real quick, because this was a low key.
Yeah.
This was a low key, like, Disney. I posted this the other day. The top apps on August 27th were TikTok and HBO Max and Disney Plus. I did not even expect they'd ever be in the top 50. And Disney Plus above YouTube? Like, what?
Okay, let me leave the audience with the take. The take was Disney should sell ESPN to Netflix, not Amazon. That was the take I had.
Ian,
No,
you should sell it.
no.
That's actually not.
I don't think they're
going
going to sell
I
it.
That'd be a
they just
terrible
wanna
idea.
partner.
Assume you
first
had
of
to
all.
sell it. Who would you sell it to? Amazon?
No,
or
you
Netflix?
shouldn't sell it at all. That's so
No, let's
valuable.
assume you
Well,
have
okay,
to.
okay.
Let's assume you have
But,
to.
but they've said that they would sell it. VITALY, they've said
Okay.
that.
They-
No.
they did say
No.
they would.
No,
Hold on.
strategic
guys,
partners.
Yes.
we have
Let me
to wrap this up,
explain.
too.
Yeah. If you want to go, Vitaly, you can go. Let me quickly explain.
I'll
Okay.
go in a couple.
Number one, Disney has no need to sell ESPN as a whole. Okay. What they're looking for is strategic partner. One of the reasons why they want Amazon as a strategic partner is because Amazon right now is, if you look at how they're expanding into NFL, the NFL Thursday night football and everything else. The one thing, when the rights come up for distribution rights, they do not want Amazon as a competitor. Instead, you neutralize Amazon as a competitor by having them take an equity position in your company right now. That's what's happening right now. Disney and Amazon are talking about possibly a strategic sale of a portion of ESPN to Amazon. Amazon gets the benefit of having a time-old brand. Disney gets the benefit of having a huge amount of cash getting infused into their business, which they can use to pay down some of its debt. By the way, is really manageable by their operating cash flow. So that's not a problem. But that additional capital could then be leveraged into use that to buy the stake from Comcast for the rest of Hulu. So that's the small goal. And at the same time, Amazon, because Amazon Web Services is the main provider for cloud services for all Disney Plus, Hulu, and ESPN Plus applications, would end up helping optimize the spend on a per screen basis, being partners with Amazon. So the deal is mutually beneficial to both. But there's more than one suitor right now. Verizon is a suitor. Amazon is a suitor. Apple could possibly be a suitor because Apple is trying to become more on the live TV side of things. The thing is, big tech right now is trying to get into the pretty much the entertainment market. So if you look at Amazon, they just
But
Amazon recently bought
specifically the live event space, which I think to your point, for Apple, it would probably make the most sense, especially if they're going to try to do something with the Vision Pro. It would make so much sense to buy ESPN and be like, have a passport to watch all the games live, right, from the front row.
Right. So there's optionality that Disney has when it comes to its ESPN asset. By the way, ESPN makes them a shit ton of money. That's the one thing on their linear side that no one can get rid of. Why? Because just think of it from a monetization standpoint, okay? If you have a TV show that you produce for $100 million or $200 million, whatever, people watch 5 episodes or 10 episodes and then it's done. No more monetization. All you really have is just subscribers, right? With sports, literally you have a live captive audience, and at the same time, you're getting them to watch ads in when the shit starts, in between every quarter, in between every break, in between every halftime show, you're getting ads constantly pumped in, right, over the course of the entire watching experience. That advertising revenue is huge, right? So now by having a partner like Amazon, you could actually go granular, and a DTC model where you can go granular and do targeted advertising, so that you're not watching, like, let's say, a tampon commercial in the middle of, you know, an NFL game.
Basketball
You
game.
can actually
everyone's watching an ad that's tailored to them.
Right. And so that is where the real monetization can really like improve. And then on top of it, if you look at the prices that Disney raised on Disney Plus, on ESPN and Hulu, I'm sure that there's going to be some churn where people are saying, you know what, I'm not going to pay for this. But there's also a lot of people that are right now saying, oh, you know what, maybe I'll bundle it up and I'll upsell and buy Hulu, because that's what they're doing right now. They're giving you a bigger discount if you bundle. So they're growing that. And here's the kicker. There is now an ad-supported tier of Disney Plus that a lot of people are going to, and the ARPU rates on a per user basis are much higher than on a ad-free subscriber base for Disney Plus. So not only are they going to capture revenue from Disney Plus, like just subscriber, but the ad tier base is going to add to it as well. There are so many bullish flags for Disney that if you really do the research, it's like a no-brainer. It was literally like Facebook when we were talking about in 2019. I think a lot of people are right now getting confused and having some political leanings with this go woke, go broke stuff. And it's one of those things that won't be realized for the next couple of years, where I think everyone is thinking Disney is somehow floundering. But if you look at their business overall, their cash flows, they're trending in the right direction, which means it'll take some time. And one last thing, and I'm not going to explain this, but just look up Disney Lorcana, okay? That is a multi-billion-dollar business being developed organically right now in Disney's platform. So the one area that I think, sorry.
Is it owned by them? Because I think it's Ravensburger or whatever they're
Ravensburger. Ravensburger owns it, but it's licensing and royalty agreement. So basically, every time a card is sold, Ravensburger gets a certain cut. Disney gets a certain cut for being able to use that IP and licensing. And that's all high margin, zero cost revenue to Disney. Literally, Ravensburger does all the production. They do all the design work. They do everything. All Disney has to do is license out the IP to these guys. And and right now they're sold out everywhere. If anyone knows,
$400 a box, by the way.
Right. And they're being sold out everywhere. I'm talking about, this is like Pokemon card craze happening. So in the next couple of quarters, when you're looking at Disney's operating income and you see their content licensing and production just skyrocket, people will be like, what the fuck happened? I thought Disney was going broke. No, it's not. Congratulations, people.
I think
gave you the inside loop.
Are they going back to Netflix? Because I think I still see some new Disney content popping up. Are they actually going back?
So what they're doing is they're realizing that, you know what, instead of having all this shit on just Disney Plus, why not license out some of the older content that no one watches on Disney Plus and get, once again, zero cost, high margin revenue?
Yeah.
You know,
no, Vitaly was talking about this a long time ago.
They're putting it out there on Disney Plus. They're even, dude, Avatar's on HBO Max if you want to watch Avatar, because they licensed it there. They also licensed it to Amazon because they realized that the more platform these things are on, the better it is for their margins. Right now, with the writer's strike, they're also saving a ton of money on not having production costs. The only problem that Disney, in my opinion, has in the short term right now is their studio income is going to be complete garbage, because the writer's strike is preventing a lot of great movies and a lot of great content from being created. And also, Disney has a lot of creative issues that they need to work out on their own, because a lot of the stuff that they've been producing, especially Snow White, is garbage. By the way, I heard rumors that they're probably just going to take Snow White and shelve it, because the PR nightmare that they would have to, the PR nightmare that you would have to deal with in order to get this movie out would make you would lose more money in terms of PR. The PR cost than you would any sort of return that you would get. So I think that I think Snow White is going to go the same route.
That one chick ruined
it. The only part that sucks right now.
The Little Mermaid remake ruined it.
No, the Little Mermaid was bad
did
for
well,
PR.
Did well financially, but it wasn't the best PR.
No, but it's a complete joke, because I mean the original Snow White is one of the main reasons why Disney is
German.
Disney today.
She's German.
And she's like spitting on the movie that basically gave her a job. It makes
That's crazy.
no sense.
No, it was.
I actually did not hear this. So this is Rachel Ziegler who did that?
Yeah.
Yeah.
She had a couple of interviews where she was basically kind of shitting on the franchise and where it came from, calling it sexist and a bunch of things, and
What the hell's wrong with her?
saying that the prince was basically, we updated it so that the prince wasn't stalking Snow White like she had.
Yeah.
Like,
Yeah, I saw that.
questions like that. So she got a lot of heat for that, and then she posted on X a response to all the hate she's been getting, and was like, "You guys don't know what it's like being me," you know. And then you got more
terrible
piled on her again, and so I think she's probably the biggest liability of it all.
Oh my god!
So they probably they might not
She just tanked her career at least for a while.
Career.
From what I'm hearing, Bob Iger is trying to like not let Disney Snow White happen. Okay, this is what I'm hearing. But the board right now is overruling this guy. He's saying that, hey, you know what? We have to live up to our DEI principles and diversity. Remember, this is not one CEO making decisions. They have a board of directors, and the board of directors answers directly to their shareholders. And a lot of the shareholders are, once again, the BlackRocks of the world, the Vanguards of the world, the fucking the State Street of the world. Most of these corporations that are going woke, they're not going woke because they want to go woke. They're going woke primarily because these guys on the investment side are literally pushing the woke agenda, saying you need to do more for this specific thing. And I think right now people are waking up to it. And as this woke, like ESG shit, ESG is dying, by the way. Give it like another 5 years and no one will fucking
It's called
remember
conscious
ESG was
capitalism now, dude.
Whatever,
They changed the name.
Same thing.
We got to let Neil go because it's getting late on his side. But we'll have you on again for sure.
I'm enjoying this conversation, but I agree. I think Disney is same like PayPal. Risk reward wise, reward is much higher than risk. They have to get their shit together when it comes to content. And shelving a movie has been done in the past. HBO did it with Bad Girl. The maker of that movie is actually so let's call it acquaintance of mine, Belgian guy, made the movie. Wasn't that happy when it got shelved, but hey, if it's crap, it's crap.
Yeah, and that's the thing. Sometimes the studios have to do what's right and just shelve it, even if it takes $100 million loss or $200 million loss in terms of production. It's way cheaper to just take that shit, put it on a shelf, never let it see the light of day, than to put it out there and take a huge hit on PR. And then what happens is all your subsequent movies, streaming services, and businesses all get fucked over. You know, so I think I think Disney is going to be smart enough, or at least the board of directors is going to be smart enough to say this shit is stupid. It's not worth putting out there, and shelve this project completely. But we'll see over time.
I think the problem, just to say one thing, Bob Chapek seems like he wasn't strong enough to fight the board. It seems like
absolutely.
The current Bob, the previous Bob and the current Bob, he's okay to fight the board a little bit better. So
he's the ex-boyfriend. He's the guy who left, right? He's the ex-boyfriend. He's like, I don't care. You asked me to come back. Like, you know?
Yeah, no, I'm going to do what I want. Yeah.
And then I have one final question specifically for Neil. If you don't, if we can't get into it too much, but it's a question that I've been wanting to ask even the junkies for a while. Do you think that companies should allow or ban individuals or other companies from buying their stock? Like, do you think it should be legal for, say, Tesla? Someone commented that that Tesla's not going to go woke and BlackRock owns 10% of it. Do you think it should be legal for a company to say, you know what, we're not going to allow BlackRock and Vanguard to buy our stock because they take up too many votes, too many voting shares? Or do you think a short seller should not be allowed? Like, do you think it should be legal to prevent people from buying your stock legally?
No, I don't think so, because then you're entering dangerous areas. Because if you do this one time, I mean, I don't know what's happening in China, but I mean, in China, they're probably...
That's an example. We will not allow any Chinese companies to buy our stock because we don't want China to have any control over our markets. It's just a general question.
Yeah, but then they'll buy it through some company in the Cayman Islands. It won't make a difference.
That's how it was buying crypto. That's how it was for us. It was more difficult to buy crypto early on, but people still did it. But you just at least make it more difficult or regulatory. Like, should that be a part of it, is to not allow certain companies or hedge funds to buy your company and essentially controlling your stock?
Buying stock shouldn't be a problem. Maybe taking control over a certain company, board seats, maybe a matter of national security. I don't know what company, depends if it's Raytheon or Lockheed Martin, maybe things like that. Yes, but I know it's out of my circle of
I think the bigger thing is these index funds need a strong competitor who have a lot less liberal ties than these other guys have right now. That's the key right now. If you have an index fund with fucking iShares, which is owned by BlackRock, see, that's the thing. People don't even know if you're investing in iShares, you're taking the money and giving it to BlackRock, right? So people are just like, oh yeah, buy this. No, fucking buy the index fund with someone that's not going to be this political. And I think right now there's no one really that's out there. I think Vivek Ramaswamy, he's the only one that's trying to put out index funds that are like general broad market index funds where they don't take positions in companies and become fucking activists where they make certain changes, like Larry Fink coming on. I can't be the fucking guy came on live TV and said, oh, we're going to force changes. What the fuck kind of capitalism is that, man? Where you're forcing, no, the ultimate goal of capitalism is to make fucking money. All right. Not your BlackRock's job is to make me money via the index fund, not make fucking political decisions on my behalf. You know, complete garbage, dude. Complete garbage.
All right.
I think this was mentioned on PBD's podcast as well. If you're following,
Strive.
Yeah,
Strive, by the way, that's what it's called.
I was watching it before we went live. They did a whole video today on Larry Fink. I'm gonna watch when I get to work. But anyway, really great to finally meet you, and would love to do it again. Thanks so much for coming.
Thank you, Neil. This was awesome. Please follow him in the description. His YouTube is there. We'll have you on. Definitely.
Thanks for coming on.
Thank you very much.
Appreciate
for sure.
it.
Later,
Thank you,
guys.
Neil. Have a good one. Bye, guys.
All right, bye.